Sir, talking of mutual funds inflows particularly, do you see some kind of some kind of slowdown, especially in the equity inflows, because most of them have not made money, so especially the recent ones who have come into market. So, do you think it's going to hold going ahead? What is your outlook for inflows?
I think I would say the last 2-3 months or maybe 1 or 2 quarters with more consolidating. The SIP book continues to remain very, very strong, close to about 30,000 crores. And new investors coming in continues to be on the rise. Still, if you look at the under penetration, so the unique customers still is only about 6 crores unique customers base. And if you look at the comparable investment that you can make in other investment, whether it is FD or any other investment opportunity, when you compare to that, I think mutual fund would remain a primary investment vehicle for long term. While one can see now the markets have been somewhat flat or been down. So 1 or 2 year now, 1 year returns could be negative or maybe 2 year return could be low. But investors now have started realizing that I'm not investing on the basis for the short term. So there has been increased maturity levels, I would say, among the investing public, among the distribution community, to advise customers invest for long term. I think the very fact that SIP has been continuously growing is, I would say, there is a change of preference of investing through the SIP rather than getting worried about the short term performance. I think my own belief is, having seen significant growth in the interest of industry, is always good to consolidate. I think we'll probably, as we start seeing the momentum for that, we have been, of course, quite bullish on for the broader market as it stands today. And we do expect for the next, say, 2-3 quarters, we'll see an uptick coming in the Indian market on 2 counts. One, of course, overseas investment will go somewhat a volatile period, overseas market, and the trade can create somewhat of uncertainty. Therefore, India can potentially become the major recipients of flow as well, and boosting the overall push. And second is, we also believe that government will take certain steps which will put the economy to the next level of growth, given the fact the nominal GDP now is coming close to about 11.5% with the marginal inflation rise, but the expected earnings coming back. So we feel that mutual fund increased participation also would come into the equity schemes. That's a broader view we have. But of course, it's always good to consolidate, which is what I think I see it currently happening.
That's true. You have a take on that?
No, I think clearly we continue to remain positive on the household savings coming to various financial products. Equities is just one among them. But I just want to also draw your attention to non-MF participation increasing in the market. So just to give you a data point, say for calendar year till date, let's say that mutual funds have bought close to about 3 lakh crores of Indian equities. The non-MF domestic flows have moved close to about 2 lakh crores. This is a very big number, right? 2 years back, if let's say mutual funds were doing X, the non-MF flows used to be 0.2x. Today, we are talking about mutual funds doing X. The non-MF flows is close to about 0.6, 0.7x. So this is primarily the pension funds, all of that coming in. And they also have got long horizons. They also have systematized investment happening. So that is another level that I think investors should focus on, saying that, it's just not the SIP, it is also this domestic demand that can potentially come through.
So with all the more reasons, domestic investors should continue to keep investing in the mutual funds.
That's true. And also talking of SIP, we have seen that sequentially there's a drop, at least for the listed companies and the overall industry, since I think we are getting more and more investors, reaching newer places. So the stoppage of SIP is also steadily going up, if you see, at least for this quarter, this fiscal. So do you think that, once this addition, if there's a slowdown, it's going to have an impact on SIP inflows also going ahead?
No, I think if you look at historically, that's where the market behaves. Those who have run through the cycles by doing SIP and continue the SIP, they don't actually cancel. They actually remain invested for long term. They have seen that whole cycle. Therefore, they understood the power of SIP, which will benefit them only in the long run. Those who come in the last, say 2 or 3 years, started participating in the SIPs. For them, actually, when I look at the portfolio, the value may not be, probably will remain flat or maybe it could be negative. So those investors generally have the tendency to cancel and then come back because they are not experienced cycles. So large pool of investors who are not seen experience the cycles, then they all will have the tendency to stop and redeem and come back. But that's anyway the cycle every time it happens. The way I think I also look at the people who participate, those who keep understanding that I have to start making the savings. That pie is also rising. So I always look at how many new investors coming versus how many are moving out. The new investors coming in actually is always the higher than the people who are moving out or maybe temporarily stopping. Now I'm not saying moving out, say temporarily stopping. That's always a function of market or individual experience and so forth. But otherwise, I see the persistency of SIPs actually is getting better because people have seen cycles. They continue to stay focused on SIPs.
And also another point on Chhoti SIP, which was launched some time back. We have not seen big traction, or at least it is not visible outside. So, what is your take? Where it is now? Where do you see it going ahead?
See, Chhoti SIP is only to make people think that investing in SIP is not as tough as what you think, or maybe is not meant only for bigger investors, meant as low as 500 rupees investors can invest. That's only to change the mindset. And if you look at the average tickets of SIPs, I was close to about 3,400 rupees. Even the online platform, who actually sells SIPs to large population, even their own average ticket says SIP 1,700 rupees. But they're only giving a provision. Why only 500 rupees? We only take 100 rupees SIP for people who can invest, who want to invest only 100 rupees. We have daily SIP where we can even accumulate daily SIP at as low as 100 rupees. Therefore, it is only to encourage people when you have to invest in mutual funds. Even as small as 100 rupees, 500 rupees you can make, so that more and more people can participate. At the end of the day, it is in the best interest of every citizen of the country to participate in the Viksit Bharat, the journey of India. If you have to say 2047, if you have become the second or third largest economy in the world, or maybe the largest economy in the world, then Indian investors should participate. Therefore, regulatory framework always supports larger participation. I think we at Aditya Mutual Fund even provide as low as 100 rupees ticket size. It is only to make people to first to see, participate, then you experience, then you keep increasing it.
One final question, to sum it up. Do you think investors should focus more on risk mitigation in coming decades in the next 5-10 years rather than generating more returns? So what is your take given the volatile situation across the globe?
No, so I think, time is the only healer for volatility. Rather than looking at it in 1-2 years, generally equity markets in India have doubled every 5 to 6 years. Okay. Now this is an average statement. Of course, there are time frames where it has doubled. If you bought it at the lowest point in March 23, 2020, it would have doubled in 9 months. If you had bought it at the peak in 2008, it would have taken maybe 10 years to double, right? But on an average, 5 to 6 years. So as long as you have that kind of a broad thinking, that 5, 6, maybe 7 years you double, and your expectations are nominal, okay? That's a good chance that you should kind of participate in equities. But if you think that your expectation is every 2 years you have to double, that is something that is highly unlikely to happen, especially at valuations where they are and with volatile geopolitical setup, etc. So keep the faith, but more importantly, have a longer horizon, because that is where more likely to be met rather than having expectations which cannot possibly be delivered upon.
That's true. Okay, sir. Thanks for giving us time.
Thanks, Harish.